Welcome back. So equities are having a good morning. Let's figure out what's up with the commodity markets. We have Manisha Gupta with the latest. Over to you, Manisha.
Thank you so much for that. So, Rebel, yes, commodities also are having a good morning. Across board, we're looking at gains continuing here. The last week was a stronger one as well. So, I want to talk about the crude oil prices, which also is trading firm off those kind of 4-year lows that we saw in the previous week there. So, the US relaxing tariffs on key trade partners clearly seems to be supporting. The markets have seen 4% of gains for crude prices in last 1 week. It still is down 8% on month, though, but we have seen near-term gains come in for this one. Well, the another important point that the markets are reacting to is the China import numbers for the month of March, where the crude imports have been 5% on a higher side on year-on-year basis. Well, China clearly has been buying from Iran and Russia, as those reports show. The other thing that the markets are reacting to is the OPEC and allies statement, where there is an expectation that you could be looking at demand going slightly lower. Remember, OPEC also is adding more barrels into the market from the month of May to the tune of 411 million barrels per day. That is something that will keep the prices in check. The other thing that the street will watch out for is the US and Iran reconvening to meet this week yet again. Those conversations were left midway in the previous week. So that is something that you could be looking at some headlines coming in from. Saudi Arabia's numbers should be on your screens, because when you look at the production from that major oil producer, that stands at 8.9 million barrels per day for the first quarter of 2025, which is the lowest in last 14 years. So this is the kind of data from Saudi Arabia, from China, which seems to be supporting the crude oil prices right now. But what doesn't really support is the oil demand estimates for 2025. The weakest of them really coming in from Goldman Sachs. 0.3 million barrels of demand growth is what they're anticipating in this year as compared to last year. JP Morgan and UBS are talking about 0.8. Most bullish clearly is OPEC, which expects that there will be an additional demand of 1.3 million barrels per day in 2025. The other thing really is about the price outlook, where, as you can see, in the beginning of this year, most of these banks were talking about 80 and 85, and there was perhaps a 90 on those charts as well. But now we're looking at all of that below 80 and in some senses below 70 as well. Goldman Sachs report that came in yesterday talks about an average $63 a barrel of a price for Brent for this year now. You have 66 and 8 coming in from JP Morgan, UBS and Fitch. Stanchart is still slightly bullish on crude oil prices. They expect an average of Brent at 77 for this year. But as you can see, rest everybody else talking about below 70. That's an interesting chart on your screens now. And this is something that the Indian markets are now talking about. Last year, in the month of April, the average crude prices were at 89.4. We've seen a sharp decline from that, $20 down really, in April 2025 in sense of prices. There is a conversation, well, we've seen this custom duty movement as well. And most analysts, oil and gas analysts, will tell you that 2 rupees of a cut, if the prices continue to stay below 70, perhaps is a possibility now.
All right, Manisha, thank you very much for that. Absolutely. Oil, very, very sharp decline. Good for a big oil importer like India.